Hi, I'm Tom Moyes. I'm the project director of the Mekong Business Initiative, and I'm here to talk to you today about a recently published paper called Myths and Maths: The Impacts of Financial Regulation on Agriculture in Myanmar. You know, the financing of agriculture in Myanmar is very important because agriculture itself is probably the most important sector in Myanmar, both traditionally and looking forward. So it employs close to 70% of all people are employed in agriculture in some way, shape, or form, and close to 50% of GDP is accounted for by agricultural production. So it's very important, and it's very important that it be financed properly in a sort of commercial way. So as we were putting the report together, we came across a lot of myths about lending and how you can lend and what the limits of lending are in Myanmar, and not just for agriculture, but in general. And the biggest myth is this idea that you can only lend if you have property as collateral. And all the banks will tell you that that's their limitation. But when we talked to the central bank, they said actually that's not the case. There is no regulation against lending unsecured or taking different forms of collateral other than property. But then when we went back to check that with the commercial bankers, they said, yes, okay, maybe it's not in the regulations, but we're criticized by the central bank supervisors if they see that we're lending on an unsecured basis and if they see that we don't have property as collateral. So there's a little bit of back and forth and confusion about that, and that is an obstacle really for commercial financing. They need to sort out those issues around collateral. So there are financial regulations that actually actively make commercial financing of agriculture a difficult prospect. So for commercial banks, they have a limitation in the interest rate. There's an interest rate ceiling of 13%. And in practice, that means that they will only lend to larger companies or commercial enterprises because they can make a bit of a profit lending even at 13% to those larger entities. But if they try to go and serve SMEs or even farmers, there'll be additional costs that are created by serving that kind of clientele. And that 13% interest rate just won't cover those costs. So banks are sort of relegated to the upper end of the pyramid, as we say. And then on the other hand, there's microfinance institutions who can finance farmers and very small farmers with very small loans. But actually, they have a limitation in their loan size. They can't lend higher than equivalent of about $5,000 in a loan. So that means that there are small agribusinesses and farmers that might have 20 or 30 or 40 acres who are really commercial, but they can't borrow from the bank because the bank can't make any money lending to them. And the average loan size that they need is much higher than a microfinance institution can provide. So essentially, the way the regulations are written, that sort of missing middle of small and medium enterprises and small and medium-sized farmers, they're locked out of the formal financial sector. That's a big problem. So the financial system really does need to change in fundamental ways, and I think we go through the whole list of recommendations for how the financing of agriculture can be improved in Myanmar in our paper. But I think one of the fundamental ways is for the regulators and the policymakers to take a step back and start thinking about what does the agricultural sector need. Right now they take a very regulatory centric approach. So they simply look at what additional regulations can be added onto the system to make it more focused on agriculture, and that's not the right way to go. We have a very compartmentalized financial sector. As I mentioned before, we have microfinance institutions which are sort of forced to stay small and stay at one end of the spectrum in terms of the size of the companies and households that they serve. And then we have the commercial banking sector, which is essentially by regulation forced to really serve larger companies. And all of the companies in the middle, which also include small businesses and fast-growing new enterprises, they're locked out. So there needs to be a fundamental sort of reset and a new look at how the architecture of the financial sector needs to be developed for Myanmar, and specifically related to agriculture, but also for all the other sectors. And that's contained in the paper, Myths and Maths: The Impact of Financial Regulation on Agriculture in Myanmar.